My friends, what is going on? Welcome back to the channel. So this is our first time to chat since November the 8th. As always, threw out there on Twitter that if you guys did the 1,000 likes that we would jump in here and do a video. You did your part. I'm here to do my part. Please allow me to be amongst the first to wish you and yours a very happy Thanksgiving. Obviously, we've got things to talk about with the stock market, but it's real easy this time of the year to become super short-sighted and to become self-absorbed in the what am I getting for Christmas, and it also becomes an easy time to be really stressed out. Like if you are the provider for your family, it's an easy time to get stressed out, and you start worrying more about bills than you do the friends and loved ones and family that are around. So I highly encourage you, obviously, as I'm about to sit here and talk to you guys for a little bit about the stock market, I highly encourage you to really take some time this week to unplug a little bit. We've got a shortened week in the stock market, so we're only going to be open Monday, Tuesday, and Wednesday. Market is closed for Thursday, and then open half a day on Friday. And really, after kind of the data dump in the first couple of hours on Wednesday, man, you are better to just jump away from the screens. It's just going to be algorithmic trading. And, large majority of the people, a lot of people don't even go to work on Wednesday before Thanksgiving, and certainly not on Thanksgiving. So this is a great week to not overtrade. I think it's a great week to more than likely be a little bit more of an observer than it is an active trader, and just see if we can really start putting in a more meaningful bottom look. So like I said, there is a decent data dump this week. Going into Tuesday, you've got PPI, and we've got retail sales, core PPI. So obviously all the inflation stuff. And then Wednesday, we've got a lot of jobless claims. So if you are on the camp, so for instance, with the data that came out on Friday, we actually had so the rate cut. My personal opinion is a big reason that we've had such a pullback here is because the December rate cut, the Fed really kind of pulled back on the December rate cut being any type of certainty. And what do we always say about the market? We say the market doesn't like uncertainty. So there's been a whole lot more uncertainty thrown into the market between are we going to cut rates, between what data are we going to get, are we even going to get the data? I think they said some of the stuff in October is just never going to be released, right? So anytime there's a lot more uncertainty that gets pumped into the market, you're going to have pullbacks, because when the market, and you're going to get the VIX. That's why we've seen the VIX spiking up like crazy here. So we certainly, to put any type of meaningful bottom in, we need that VIX to retreat. We need certainty to start coming back into the market, rather than it being so uncertain, and so the Fed being so wishy-washy on whether or not we're going to get a December cut. So you guys know the deal. I'm more of a chart and technical person than I am anything about the news. I'm always a news just justifies the moves as far as what the chart is setting up. So having said that, of course, you guys know the deal. Nothing about this video is financial advice. I do these videos completely for free for you, so that way you can try to make great decisions for yourself, your family, and your portfolio. There's going to be some stuff I'll be very right on. There's going to be some stuff I'll be very wrong on. I always own that. You're always getting my best shot, and I'm always I'm going to own the misses just as much as I'm going to own the victories. So please take that into account at the end of the day. Don't do anything ever because I or anybody else on the internet ever told you to do anything. If you want to actively manage your money in your portfolio for your family, which I personally think that you should. I'm a huge believer in teaching personal financial responsibility. That's the whole reason I started my trading community, and we'll do the shameless plug on that. If you guys, a lot of you guys that are on just YouTube, you may not either follow me on Twitter or know that I have one. So on Monday at market close, I will be doing instead of Black Friday, we're going to do Black Monday deal where you can join for a discounted price, and you'll get to keep that discounted price forever as long as you are a member. There's only going to be 25 spots available. So follow me on Twitter if that's something that you're interested in. So let's jump into kind of the charts here. So really what I'm going to need to see on QQQ is overall. So let's back up to November 8th video. So on the November 8th video, this would have been made, so I would have done it this weekend. So after this Friday close, where we hammered up off the 50-day, I said what we're going to have to watch out for is we're going to have to watch out for a low volume push back up into the discount zone. And if you'll remember, if you need to go rewatch that, I said that discount zone was between the 618 and kind of that 786. Really, anything over the 0.5 is where we're getting into that territory. And that's exactly what happened. So Monday, going into the week, we had the massive gap up. And rather than getting any push off of Monday's candle, we had a low volume, low spread candles. And then, of course, we gapped down, rolled over, and then we made new lows. I'm still not convinced that with what we got on Friday that we have put in any type of meaningful low. I think there's good signs of it, but we certainly need to see more. I can certainly still make a case for us pushing lower. After that, I don't remember which day it was, but I posted it on Twitter and I don't delete stuff. So when we came, I said, now we got to see, do we make an A, B, C style move and then we catch a D, E? And if you'll go back and look, this is exactly where I posted it, was right around this 611 level. And that's going to be, once again, getting into our discount zone. Look at that. I always say that, the technical analysis to an extent is a self-fulfilling prophecy from a standpoint of just going, if everybody is watching a certain area that knows about technical analysis, is that why most buying and selling happens at those key levels? And that's why I think technical analysis works. I see people all the time say, oh, it's astrology for stocks and stuff like that. And to an extent, I see what they're saying. But if by looking at a stock chart, where you're going to find the largest amount of both buyers and sellers, it allows you to make great informed decisions. And that's what it does. It's that self-fulfilling prophecy that if myself and people that manage huge funds and things of that nature are all looking at a key area to either buy and or sell, then that's why you'll get those violent reactions in those areas. And that's what matters, is where am I getting the most violent reactions on a chart? That's where the most liquidity is. And what do I always say about liquidity? The market is on a never-ending search for liquidity. We are looking for buyers and sellers. We make a lot about, and I use the terms too, between bulls and bears. Really, we should always just say, are we buyers or sellers here? Because I personally don't believe that anybody who's successful in the market is just always bullish or always bearish. There's always going to be a combination of, this is where it makes sense for me to buy, and this is where it makes sense for me to sell. So that's what the market is always looking for. Where can it find the most liquidity? So post NVIDIA earnings, we gapped right up to our next level. And obviously, we sold off, put a massive bearish engulfing in, and then I posted Thursday going into Friday, don't be a late bear. The market was up as high as about 2%, and then closed back down. We retreated there towards the end of the day. The good news is, though, is that the RSP, which is the equal weight for the S&P 500, saw its highest volume ever, and it also recovered these lows from back over here in August. So the fact that the RSP saw a ton of volume, and where we see that is we see it in IWM's candle. IWM, ton of increasing volume, regained that 233 level plus its 100-day SMA. So we want to see that breadth. Every sector was green to a certain extent, or I believe it was 11 out of 12 sectors were green on Friday. So overall, that was good signs. It's the first real signs that we need to see that things are starting to put in a meaningful bottom. Also, too, we want to see that VIX continue to retreat. Really, we want that VIX under 20, and in a perfect world, we want it underneath 16. When the VIX is elevated, though, it will provide a whole lot of opportunities. If you follow me on Twitter, you'll see you can go on Thursday, which is one of its biggest, spike days, and see what I did with Tesla. I had calls in the morning, once we pushed up and rejected around 4:30, then I switched over to puts, played puts all the way down, and then towards the end of the day, I tried to jump back in calls and unfortunately got stopped out there. But it was made a ton of money on calls in the morning, made even more money on puts in the afternoon, and then lost on calls in the afternoon because I just didn't want, when the VIX is super elevated, especially if you're swinging any type of, low days to expiration options, it's not always the smartest because when volatility is high, I said this to Market Sleuth, his follow is at Market Sleuth. He's a great follow, by the way. His name's John, where it's like, I like it. Anybody who knows me knows I like volatility. I like, let's get this because while volatility provides opportunity and you can make outsized gains, just like I always say, when there's outsized gains on the table, that means there can also be outsized losses. So I highly recommend you do you. This is just me, rambling on my YouTube channel. I highly recommend that if you're doing anything short dated when it comes to options, to really make sure those things are priced to zero, especially when volatility is really high. Also think it's a great time to sell options if you know what wheel trading is for stocks that you want to own for the long haul because the premiums are juiced. So anyway, sorry. If you need to know more about that or understand that better, that's where you're going to have to join my Discord. I'm not going to sit around and talk about that on these YouTube videos. So on the VIX, we really want to see that start to flush out. The more that VIX flushes out, the more we're going to see that the certainty in the market. People need to breathe. Like for me, Friday kind of gave it the we're panicking, and then Friday gave us the kind of are we okay? It's kind of like, think of the little Ice Age gif where the little rat thing's holding on to the wall and he's like it's just, hey, okay, have we found a meaningful bottom? If we haven't, which I do think that there's still a good chance that we can retest the lows or even make new lows, but if we haven't, what we do want to see is we do really want to see volume start lightening up. We want to see the sellers getting more and more exhausted at this time. Somebody asked me on Twitter, about volume, and essentially just ton of volume at tops shows buyer exhaustion, and ton of volume at the bottom overall shows seller exhaustion, plus the combination of buyers potentially stepping in. Just like high volume at the top of trends shows sellers really starting to step in, with buyers still trying to push the price higher. So let me get over here to QQQ. It'll be kind of one of the easier places to put it. I said in my Discord that this kind of 583 to 574, that's really kind of the area that I'm looking to hold. And you can see we, if you will, dipped our toe into the water on that on Friday, and then we put in a reversal after that. I really would have liked to have seen us close over a 50% retrace of Thursday's move. We pushed up to that. So let me throw my fib up here. So we pushed up towards that, but as you can see, actually we didn't quite get there. That must have been on SPY that we got there. I know in my weekly video we got there. Yeah, okay. So see here on SPY, we pushed up to that 50% retrace, and then we still found sellers there, and we pushed down towards the end of the day. So we needed a much better close, where on IWM, once again, huge volume, and you're seeing that. We closed well above that 50% retrace. So that's also why the RSP looked so good. So just we saw more of that rotation, more of that breadth building out. So tech is definitely what I trade the most by far and away. And so tech is also what we kind of want to see lead the recovery. Watching crypto here over the weekend, let me go to the daily here. So we can see that crypto, and what I said was we really want to see crypto start participating in this, in this rally and or putting a bottom in. And then Friday, we put in a super high volume hammer, followed up by another low volume sell day. And as of right now, as I'm making this video, crypto is putting in a really nice Sunday, or, Bitcoin is. But we'll see the same thing with Ethereum. Ethereum really needs to get back over, let's just call it 3,000 to really start looking like it's in a recovery phase. But we have not seen crypto recovering. In fact, we've seen crypto do worse right now through this sell-off, so crypto pulled back a total of 36%, where back over here in the whole tariff crash, we only pulled back 30%. So we've seen crypto do worse at this time of the year with a much lighter pullback in the overall indexes. So we certainly want to see just these risk-on names start doing well. Where we have to be cautious is in, do we put in a lower high? So the market is, when boiled down to its most simplistic terms, you are either in a bullish trend where you make a series of higher highs followed by higher lows, or you're in a bearish trend, which is literally the exact opposite, lower highs and lower lows. So what we've been seeing is we've been seeing that. We have been overall in a bullish trend since the lows in April, and now we are in a bearish trend. And if I go to the lower time frame, we'll just go to the 2 hours, it's pretty clear to see, right? Lower lows and lower highs consistently being put in. So even if futures are nice and green, right? Everybody's going to be super excited about futures being nice and green, going into this week. And if we move back up here, let's see where our discount zone is going to be. So if we just push back up here and look at that 786 is literally right on the 50-day simple moving average. So if we just push right up here to the 50-day simple moving average and then we roll over again, we are still making our series of lower highs and lower lows. So the first sign that a bottom is being put in is we can make a lower high, but then we don't want a lower low. We'd want something like a double bottom or just so if we push up, we want to put in a higher low. So the first sign that real bottoms are being put in is we want to see the overall structure change from bearish to bullish. And right now, we do not have that. Okay, so I do want to be clear about that. So even though there's signs that are good overall that we are putting in a bottom, we're not anywhere. I mean, anybody acting like they for sure know that a bottom's put in, just unfollow, mute them, block them, don't listen to them, okay? Because anybody who knows anything about the market never speaks in certainties, they speak in probabilities. So I still think we are we're at the end of the day, I want things to go up. I really do. So at the end of the day, my heart, if you will, would be in perma-bull territory. But I don't trade my feelings. I don't trade my heart. I trade the chart. I trade what's in front of me. And you can go see that with what I did with Tesla. Like I own thousands and thousands of shares of Tesla, but I am unemotional when it comes to trading it. I will buy puts. I will buy calls. I will sell calls. I will sell puts. Like, it just doesn't matter. You got to make business decisions, not emotional ones. Yes, when Tesla running like crazy, does that make me feel good? Yes. But is that a reality all the time? Absolutely not. So, and that's where we got to live. We got to live in reality, my friends. So really what we need to do is to start looking good from a tech standpoint, or QQQ, all the indexes really, is we got to start recovering the Thursday highs, in my opinion. This is where we gapped up into NVIDIA earnings. So I will feel good. Like, I will start feeling cautiously optimistic, if you will, over about 600 on QQQ. But we are, and you guys who have followed me for any amount of time know this, that we are in guilty until proven innocent territory. That means the sellers have proved that they are the ones in control until they prove that they are not, until we can prove that buyers are in control. And this is why I always say, trying to time tops or bottoms is foolish, because who really times tops or bottoms is big money. It's not me. It's not you. It's big money. I always use the analogy of they're the big shark swimming around, and we are just a little fish. And then when the big shark eats something, we'll just be happy with the scraps that we get. And you can whine and cry and complain about that and inequality and everything like that. But once again, it's reality. It's the world that we live in. So. And that's where I choose to trade and speak my mind in. So I need to see us start regaining some of our lower time frame SMAs and EMAs. So a big one to watch is going to be the 20-day SMA. And you can see that's pretty much right here at that 611 area that I've marked on the chart. So for bulls to fully be in charge, we need to see bullish structure, and we need to see us recovering some of these EMAs and SMAs that, as of right now, since we gapped down back up here on Wednesday, November the 12th into Thursday, November the 13th, all of our averages that when we look back on our bull run, right, everything that has been supporting us the entire time, these EMAs, are now literally doing the exact opposite. They are, every time we've come up and we've tested the 921 and 20 SMA, we have found rejections. We have found sellers. So this right around in, I talk about this a lot, this 611.64, that's not, some steel barricade or anything like that, because obviously we gapped and we pushed above on Thursday before we found a large amount of sellers. Myself and Bronx in our Discord, we're always constantly watching what's called market tide and net premiums, which is just our puts coming down or calls coming in, and this is overall market. You can look at individual stocks, which as a member of our Discord, you get access to all the unusual whales tools and everything like that. It's like a $300 a month value that you get just being a member of the team, but you can see it in real time if puts are selling off. And so not any one thing for me is like the end all be all. I mean, at the end of the day, I think price action is by far and away the most important thing. And then everything else is a distant second. Yes, including volume. Volume's number 2, but it would be, at the end of the day, to me, price action is what matters. And then volume, and then your EMAs and SMAs and MACDs and RSIs and all the other little things. So what I'm going to be looking for personally is I need this box obviously checked off, and then whether or not I want to long something or whether or not I want to buy puts on something is just going, okay, flow is lining up for me, market tide's lining up for me, net premium's lining up for me, the EMAs are lining up for me, SMAs. So you just kind of got to go through that checklist of everything needs to kind of line up to be willing to risk any of your hard-earned money. So as of right now, I personally would be still looking to potentially short any pops that come along the way until I really see some bullish structure. And then if we do roll over, let's say we gap up into like Monday or Tuesday, because right now, every gap up that we have gotten has been sold off, right? And we've seen it where we like gap up, we push the first hour or two of the day, and then sellers come in that second half of the day or mid-morning and just drive it right back down. So right now, once again, the sellers are the ones that are in charge. So I'll be looking for, even if we do, gap up into Monday and if we do roll over, I want to really see that volume. I don't want to see lower lows accompanied with strong volume. That's not what I want to see. If we do roll over and test this bottom again or even make a new low, I want it to overall be on really light volume. And then I'm going to want that day that clearly buyers are stepping in and starting to push this thing back up. So we need the bullish structure. Right now, bears are the ones, bears and or sellers are the ones that are in charge. So we need to see that repair get done. So QQQ, it's really got to recover about 611. I mean, we closed at 590. So, we got 21 points before I'll really feel good about buyers being back in control of the situation. Now, obviously that means a bottom's going to come before that, but that's going to be, a significant area on the chart to recover to feel good about it. It really will be. Okay, a couple individual charts we'll talk about. So Tesla, I did get some calls on this one at about this 396 level because what we were seeing is the gap up. So this was where Elon was buying this Friday, September the 12th. So far, that gap up and where it had been our gap down from the beginning of the year back here in February, we were overall finding support. I told the team repeatedly, what I want to see here is I want to see a quick, vicious recovery. I've used this example before. I'll use it again in the future. But what we saw with NVIDIA, when we were all tracking the NVIDIA head and shoulders, this is back in 2023, right? And then it breaks down and you get that vicious V-shaped recovery, makes an ascending triangle, and continues the overall move. So what I was saying, and I posted this on Twitter, I said, if we get that same V-shape style recovery, that I think Tesla can make new all-time highs by the end of the year. And right now, we are not seeing that. It's not looking great, to be honest. In fact, what we are seeing is our trend from those Elon buys that had been support the entire time, that is now turning into rejection candles. So the overall reality is until Tesla can recover some of these key levels, it's in danger of coming back down further. Now, what I like to see so far is when you see things like crypto and Bitcoin's rallying and more of those risk-on assets, Tesla is one of those high beta names. So Tesla is absolutely one of the names I'll be looking for to kind of lead the charge in recovery. So I always tell my team, I treat support as support until it's proven otherwise. So where we had been wicking off of, which would have been the previous Thursday close, the Tuesday, Monday. I shouldn't have to sit here and explain this. Pretty self-explanatory here. Right around this 396 to 397 was an area of support, and I wanted to see us close above that. We did not. In fact, we were sinking pretty good into close because we had kind of a nice looking hammer candle here, which would have been an overall hammer candle off of a double bottom, off the 100 SMA. Things were looking relatively strong. And then into close, the last 10 minutes of the day or whatever, we went from 396 all the way down to 391. So it loses 5 points right at the end of the day. The candle was starting to get a little bit uglier. So that's why I decided to close my calls right at the end of the day for a loss. So what I'm going to be looking for is into this week is, do we gap above that, and then do we send up to 414.50? 414.50 is just a huge support resistance level. And then over that, then we kind of got to regain trend and or the 50-day moving average. So I'm not going to sugarcoat it. Tesla's got a lot of work to do to not look very distributive. Right now, it's a pretty clean double top with pushing down, and that means we could come back down all the way towards the 350 area. The great thing about low volume areas is you get to slice through them on the way up. The bad part about low volume areas is you also get to slice through them on the way down. Now, where this low volume area was, we finally kind of filled it all out throughout August. Now, I wouldn't even be surprised if we trade sideways in here. But the nice thing about Tesla when it's consolidating is, and I say consolidating, it's still consolidating in a 100-point range. So it's still very tradable even while it's consolidating, which not a lot of stocks are like that. And if you want to actively trade stuff, I highly recommend you trade the stuff that has the highest liquidity. Things like Tesla, things like Nvidia, things like Palantir. Those are retail favorites, which means there's a lot of liquidity there, which means you get better bid-ask spreads and filling in chains, option fills on the chains, stuff like that. So, and that's important. If you know what that means, you shouldn't be trading options. You should be working on your education. And that's okay. We all can do that as well. We always get better. So what I'd be looking for on Tesla is if we do come back lower, that we hold the 100 SMA down towards this 380 area. Over 400, I like it to push back up towards the 414.50 area. Over 414.50, then I think 430s are on deck. Really, though, got to get some daily closes because right now the sellers are very strong up here in this 420, and Tesla does not always do well going into the first part of the year. This is actually the time of the year where you really want to see Tesla. So, it's a big week for Tesla to start perking up, to have a nice end of the year run, because it typically does not do well in the beginning of the year. So that's kind of overall what I want to see on Tesla. But really, if we do come back down, we can dip our toes below this, but it really has got to hold that 367 to 350 area, in my opinion. Nvidia is one that I want to see. If we do come back, we want to see the 170 hold. So our 183 to 184 area, that was showing a lot of support back here. And then what did we get on Friday? when we zoom in. This is why it's so important to have your key levels marked off on your charts, guys, and to know them, because we pushed right up to that 184 level before getting that rejection and then pulling back. So if we do roll over here, NVIDIA has been showing a lot of support over the 183 to 184 area. Now that's showing resistance. So I actually do like puts if we push back up into there. If we gap over that into Monday, though, then you would just want to see that area hold as support and then continue to push out. We already started to get some news that Trump was going to loosen up on the potential chip sales to China. So obviously that's going to bring wind to the sails to all chip companies. Let's see here. I'm trying to think about Unity is one that is looking really good up in here, but we need to get back over that 40 area. The continued support in the 35, I think, is a great area to potentially buy dips on over kind of this 38 to 39 level, and obviously that key psychological level of 40. I think it's one that potentially could push. Overall, had a much better day than the market. Oklo, this is one that I talked about with the head and shoulders right here. I wish I would have traded that. I didn't. Hand up, accountability. It was a great setup, but it was also coming down to earnings. But post earnings, I definitely wish I would have gotten puts on this deal. However, it is starting to put in a high, not starting to, it did put in a high volume hammer candle right back here at this key area, which was its tops back in August. So this is a great area as long as you're holding 80. If we roll over in the market, which I still think is likely, we could come down here and touch that 200 SMA. That 200 SMA also lines up with this channel that Oklo has been in. Those of you that have watched my videos know I've talked about this channel multiple times, kind of overthrew it, and then what happened? So it could all the way come back down here towards that $60 to $70 level before then finding that bounce. And like I said at the beginning of the video, this is one of those like self-fulfilling prophecy looks. Let's see here. Palantir is another one. Obviously, Michael Burry, Michael Burry, right? Am I saying that right? Whatever. Big short dude. Area of interest right here. Might make its way down to the 200 SMA. Like I said, that I wouldn't be surprised at all for that to happen, especially if we gap up and just continue to sell off and kind of that here we go again. So Palantir making its way towards its 200 SMA around 140, certainly a possibility, but treat support as support. So, this whole area right here, there's been a lot of buyers in this area right now. So even if it pushes back up towards 170, I will say, if it does push back up towards 170, look for 170. If it is in a full-on distribution and you come up to 170 and roll back over and you have a LPSY that pulls up here, that could be the move that rolls it over to the 200-day moving average. One that I am personally excited about potentially buying, or not potentially, well, I guess it is potentially because it's not there yet. If Hood comes back kind of this 90 to 85 level in its 200 SMA, I am absolutely buying Hood at that level. If you are a option seller, I don't even hate selling puts in here relatively aggressively. I'd be watching for this order block from back over here on Friday. I believe this was before they had their little event or whatever, but I'd be watching this order block to see if that holds up, and especially if Hood continues to trade sideways in here as its 200 SMA catches up, and then it's kind of they run into each other, if you will. That level of confluence right there, and it might take till December, especially if we continue to trade sideways. If we get any type of quick rollover, I will definitely be buying Hood on the 200 SMA. It's just happening. It's guaranteed. I promise you, it's happening. But of course, do your own due diligence. But I think that's really all I want to talk about. Not too much is sticking out. If ASST Strive, so this is one that has been consolidating nicely on the lower volume, kind of doing a falling wedge look right here. If Bitcoin, these risk-on assets continue to look well, I like for Strive to make its move back up here towards $1.68. And especially if it gaps above like $1.15, you're kind of leaving a little island bottom gap down here. If it gaps up here, I think it could make a nice run, at least back here towards these highs around $1.60 to $1.80. So not a ton of setups this week, to be honest with you guys. Like I went on at nauseum about at the beginning of the video, this is going to be a week for me personally to probably do more observing than active trading, and watch for the setups that present themselves, whether it's a short the pops or whether it's a buy the dip if we roll over. So if there's a pretty large gap up into Monday, I will probably be looking at potentially getting some puts or even selling some calls on the stocks that I own that'll fade that gap up, because that has been what is happening, and that is our overall trend still, which means when there is a trend reversal, you're going to have some trades that you're wrong in because it's a trend reversal. So I certainly wouldn't marry any positions. If we do gap up and VIX overall continues to hold support though above that 20 area, I'm going to overall anticipate that gap up rolling over. Even if it doesn't do it like on the actual day, I think overall it's still more likely to roll over than not. I think we're going to at least test the lows one more time. Even if we gap up, I think we'll probably at least test the lows one more time. And then markets are always more likely to end corrections on gap downs than they are gap ups. So even if futures are nice and green, we'll continue to see if that move gets faded. But I hope overall this video and the rambling was helpful to you. Please like and subscribe to the channel. The more love this kind of stuff gets, the more likely you are to get more videos. And then, of course, follow me on Twitter, Colin_Gladman. And last but not least, if you want to join my community, that link will be posted Monday at close, 25 spots only. But once again, I want to wish you the happiest of Thanksgiving. Enjoy your family, your friends. Tomorrow is not promised for any of us, so let's enjoy the people and the relationships that we have while we have them. Much love, and I'll see you in the next video. Have a good one, my friends.